basically almost every employer has Fidelity for their employee plans, their pension plans, whatever they have. Basically, they have Fidelity sponsor them. So this is big for Bitcoin. There's going to be a lot of capital coming into the Bitcoin networks, and this is huge. Now, like a few specifics of what's going on with this basically change is I think they're going to allow people to only invest 1% of their portfolio into cryptocurrency at first, because there was a little bit of a pushback from the Labor Department. I don't know why there was pushback from the Labor Department, why they care so much about Fidelity providing people with options. But yeah, there's basically a growing interest from many different sponsors, so we might see more capital being infused into Bitcoin in the future.
It's interesting that you bring that up because, from my knowledge, like another way to own Bitcoin through like a retirement vehicle, like an IRA, right, or a 401k, not particularly a 401k beforehand, but with the IRA, you were able to own GBTC, right? But now Grayscale, they're going to get hit over the head because they're charging 2%, basically for a paper Bitcoin. But now with this 401k, I'm assuming from what you're telling me, it's not only an option for the 401k, but I'm guessing there's some sort of like custodial aspect to it. So how do you think that's going to disrupt like that whole self-directed or like self-purported like Bitcoin IRA market as well?
To some extent, yeah, I think it's going to disrupt the GBTC and the other basically Bitcoin trust, because their fees for those trusts are 2%, like you said. But basically, Fidelity is going to be charging 0.9% to custody the Bitcoin. So there's still going to be somewhat of a fee to hold the Bitcoin in your retirement portfolio. But it's basically just going to have like a compression on fees. So I think a lot of these trusts are basically going to be forced to compress their fees and come down. And it's really putting pressure on the market. But until we see a Bitcoin ETF, that's when we're going to see like real compression on these fees, and we're going to see the investor come out ahead.
Yeah, and that has a lot to do with Gary Gensler, right? The current SEC chairman, if I'm not mistaken. He's kind of pushed back on the Bitcoin ETF. So we really only see a futures ETF, not a spot ETF. Is that correct?
Yeah, exactly. There's only futures ETF. He refuses to basically approve a spot ETF, but there are spot ETFs in other countries like Canada and Australia, and other countries across the globe. But in the United States, there's no spot ETF for Bitcoin approved, and you have to basically invest. If you're a financial institution, you have to basically invest through other means, through basically miners that might hold Bitcoin on their balance sheet, through futures ETFs, through trust, etc., because they have a capital requirement. They have like a specific capital requirements and such that they have to follow, so they can't buy Bitcoin directly.
Absolutely. And what do you think that means for the bullish case for Bitcoin, right? So like, where do you see it going? Now, let's say that I don't know how many people have 401ks with Fidelity. I'd imagine a lot, right? They're pretty much the second largest retirement.
I think I was reading somewhere. There's like 40 million accounts, 40 million customer accounts.
That is fucking ridiculous. 40 million accounts. Holy fucking shit.
Yeah. I have an individual brokerage with Fidelity. I have an individual brokerage with Fidelity. I park my emergency fund in I think an S&P 500 index fund, actually. Just park it in there, and I'm hoping that I never have to spend that money ever because it's an emergency fund. But yes, I do have a Fidelity account, and I've never had a problem with them.
Okay, so on that same note, like getting back to the 40 million customers that have an account with Fidelity, particularly, like, let's just say, was that a retirement account figure, or was that just like generally speaking 40 million people?
I think that was just a retirement account figure. I think they have actually much more than that. That's not even like the full account basis that they have.
That makes sense because they do manage $4 trillion, as you alluded to before. But now let's say that
$4 trillion is what they personally manage. Like they have like 10 trillion in customers' assets. So if you just look at like what they manage, that's 4 trillion, but they have 10 trillion in customers' assets. So like if they custody your stocks or whatever, Bitcoin, etc., like DDT, how he said he deposits money into there, and then he basically buys the S&P 500. Like they have $10 trillion of custodied stocks and ETFs and index funds, etc.
Right. So now let's say 4 million Fidelity customers have one. And by the way, 1% Bitcoin allocation for the average person who's not really into the whole crypto space and is still kind of like dipping their feet into that space. I think it's perfectly fine. I think it's pretty reasonable. I even would go as far as to say that like a 5% allocation is very reasonable too, because you're really like the 1 or 5% difference in your overall portfolio, if that's not going to break you, and if it comes to the point where it is going to make or break you, you probably shouldn't be investing. Like that's fucking such a small, minute part of your portfolio. And I think that it's actually probably better than bonds, because now you see interest rates going up, right? So the Fed says, as we spoke about last week, Jerome Powell kind of came out and he basically put all the cards on the table and said, hey, half 50 basis point rate hike 6 times next, or really this year. So, you're really looking at a situation where interest rates are going to keep going up, bond prices are going to come down. Obviously, they're inversely correlated. So now it's kind of putting pressure on alternative investments, and people are exploring that avenue. And I think that ultimately, like, this will definitely be bullish. But now, if you had to try to quantify the price of Bitcoin, I don't really like doing this, but if you had to set a price target at some point in the future with this 1% cap, of a Fidelity sort of allocation in 401ks, like where do you put Bitcoin's price? Like, does this change? Obviously, this changes the value add perspective positively, but like if you had to try to quantify it, what amount would you assign to that, Mr. Robert?
Yeah, I don't think you could necessarily quantify the price based over this, but if you look at basically how they say, oh, 1% of your money in Bitcoin is too risky. I think it's actually more risky to not have 1% of your portfolio in Bitcoin, because if you look at the bull thesis, say everything goes right, everything goes correct, and Bitcoin becomes the global reserve currency of the world. A 1% hedge to basically Bitcoin becoming the global world reserve currency is not really that much. If you look at the potential of it becoming the global reserve currency, if it becomes the reserve currency of the world and everyone moves away from the dollar and people start using Bitcoin as legal tender, like El Salvador and the Central African Republic of Congo, you could see Bitcoin move up because it's portaless. It provides people with less transaction fees when they're transacting, and it provides a lot of benefits, because you look at Forex and how many fees people have to pay each year moving their, let's say they go on vacation or they have houses in multiple countries across the world, and how much fees they're paying. If you had a currency that could just be used in every single country in the world, that has tremendous value. And if the bull thesis comes correct and the world shifts to this global reserve currency, you could easily see $1 million Bitcoin price. But you might say like, oh, the probability that's low, but you still have, if you allocate a small percentage of it and the bull thesis comes correct, then your returns are going to be astronomical. So you should at least allocate a small percentage of your portfolio to this in case it turns out. It's kind of like venture capital investing. Like, you take a long shot of a company, hitting it in Silicon Valley and such. So what are your thoughts on like either Lord Edge or DDT on like how you should allocate Bitcoin to your portfolio?
Yeah, I think anywhere from 1 to 5% is perfectly reasonable. I love that you brought up as far as transactions through other countries. So some of the guys I used to work with way back in the day, back when I was a kid, pretty much like they were all from like different countries, and they came to America as like first generation immigrants. So for them, they would save a shitload of money, right? Because if they're sending money back home, now they're not dealing with a company like TransUnion, which is charging an absorbent amount in fees to send that money back over. So something like Bitcoin makes, like you said, it's borderless currency, so they can easily transfer it from one wallet to another and transfer that money essentially through Bitcoin as a medium of exchange to then be able to spend that money in their home country. So I love it. I think anywhere from 1 to 5% is totally reasonable. I think if you're very risky or you're very risk tolerant, I think even 10% is very reasonable as well.